So North Carolina has remained a primary focus for Rise48 Equity because, we've always been focused on large growth markets. So we started in Phoenix, then we went to Dallas. We tried to see what are the biggest factors we look for. We look for population growth, job growth, landlord-friendly type of regulations. And so North Carolina checks all those boxes. It's business-friendly, tax-friendly. So it's really just a booming market that we want to be buying more multifamily in. North Carolina has a very rare, important combination that we're looking for. We are looking for strong jobs with affordable rents, where people can make really good money, but the cost of housing is still very affordable and very low relative to the rest of the country and relative to a lot of other major markets. And so this just gives you extra cushion. If somebody is making X amount of money and their rent is significantly less than that, then you're gonna make sure that that rent is getting paid, and that over time, there's gonna be some room to push those rents up and execute on our value add plan. When you look at North Carolina, you've got very affordable rents, you've got affordable housing all around the place, but you've got really strong jobs, and it just continues to explode with growth. There's a ton of new companies moving there, and so really good dynamics overall. When you compare like a North Carolina to like a Phoenix or a Dallas, geographically, it's just a lot different, right? It's a little bit more fragmented. And so we always like to be in the heart of major markets. We don't want to be in very tertiary markets. With North Carolina, you have Charlotte, which is the biggest city and really the biggest market in North Carolina, but you have two other markets that are an hour and a half and 2.5 hours away from Charlotte, respectively, that are just exploding with growth. So Greensboro is about an hour and a half east of Charlotte and really is in between Charlotte and that Raleigh-Durham-Chapel Hill, what they call the Triangle. So we really like Greensboro. It's very affordable. You have a ton of growth there. Then you have the Triangle, which is Raleigh-Durham-Chapel Hill, which also is just exploding with growth, a ton of new jobs. You have a ton of the top universities there in the country producing a lot of the top talent there. And we look at major population concentration, okay? We don't want to be in cities that are too small. Like we've looked at a market like Fayetteville, for example, but it's just too small and it's heavily reliant on US military base there, right? It's basically a military town. And so we want to make sure that whatever market we're in, it is very dynamic and diversified from an employment base. And so Charlotte, Greensboro, and the Triangle, which is the Raleigh-Durham-Chapel Hill area where we've been buying deals, they all have those features. For North Carolina, whenever we're evaluating risk, it's really the same as any market that we look at. So the first thing we're looking at is crime scores. And the good thing about North Carolina, very low crime, across pretty much all these major cities, much lower than a lot of the other bigger cities in the country, what we've seen. We're looking at median income. We want to make sure that we have strong demographics, strong income in a 1 and 3 and 5 mile radius that our projected post-renovation rents can support, and so we want to make sure that these people can afford these rents and that we've got a good, healthy cushion there. And we want to always look at supply of new housing, okay? We want to make sure that there's not a ton of new construction of apartment buildings right around where we're buying our assets. We've been especially focused on that the last couple of years as we've entered North Carolina. And I can tell you, North Carolina has much less supply than the other major Sunbelt markets that we've been looking at across the country. And we now own over 1,500 units in North Carolina, and we're seeing the impacts of a lot less supply. Those deals are performing really well. So we want to make sure that we're focused on crime, income, and then supply of new housing. Those are things to really focus on when we're looking at these markets. If you could have entered Dallas 10, 15 years ago, then, in hindsight, you would have jumped at that opportunity. We feel like North Carolina is just going to continue to explode with growth because it's very unique, especially for the East Coast, okay? So you've got affordability, strong jobs, strong population growth. I mean, Raleigh alone is among the leaders, if not the leader, in population growth since COVID. So it's just a great overall market. It's very landlord-friendly, business-friendly, tax-friendly. So we feel confident in the long-term horizon of North Carolina for all those reasons, and we think it's only going to continue to grow. People and jobs are going there. They are not leaving. They're leaving other states to go to North Carolina. So that's the type of market that we want to be, which is in the path of progress.